Hello guys, good morning. My name is Bala Francis and welcome to the weekly commentary for the dollar and foreign currency. So this week we're going to analyze the dollar index and foreign currencies to see my anticipation for the dollar and foreign currency. As usual, the first thing I would like to do is that I would like to know what's happening on the economic basics, on the economic calendar. So we'll go to Forex Factory and we're interested in checking the calendar of events unfolding during the week. We're interested in taking note of the time the event is going to happen, the day, the type of impact, whether it's a medium impact, high impact, or totally there is no impact coming up on any of the assets. So we pay attention to the desired assets that we trade. As you can see, on Monday we have zero high impact news unfolding on the economic calendar. Usually when there is this kind of day where there is zero high impact, because we do not see any of the red boxes or orange boxes appearing in that trading day, we should reduce our trading objective, because most times price will present with very little liquidity during such a day. So usually we identify these days as a low volatility trading day because we do not see any high or medium impact news events unfolding in that day. So you scroll down and take note of all the highs and medium impacts coming up on the desired assets that you trade. If I were going to do that, I'll pay attention to the high impact or medium impact unfolding on the GBP or Euro USD all through the week, and also the dollar, all right, because they have a relationship. Okay, so once you do that, you go down to the dollar index and you do your top-down analysis beginning from the monthly time frame. All right, from the monthly time frame, you are interested in knowing where price has traded away from and where price is currently and where price is going to go to, because that will be the draw on liquidity. All right, currently price has traded away from an immediate trading range between the low here, all right, the low to the high. That's our immediate trading range at the moment. All right, so we have identified this as our trading range, and price has traded into 50% of that trading range, and we classify that as a discount level. And then we see the dollar presenting with a current bullish institutional order flow, because we see the monthly candles showing willingness to take out the previous highs of the monthly candles. That tells us that we are in a current bullish institutional order flow. All right, then also we see the dollar has traded into a sell side imbalance and a buy side inefficiency. We are hoping that the dollar could close down that sell side imbalance or buy side inefficiency before it starts to drop, or possibly the dollar could continue a bullish movement throughout the end of the year in confluence with the seasonal tendency. All right, so you can see price has tapped into that sell side imbalance, buy side inefficiency. We were even looking to see the dollar trade into this bearish order block or the previous volume imbalance right there that was violated. The dollar could close down that level as it confluences with a bearish order block at the same level. All right, all these are possibilities we are looking at. All right, so the dollar is currently bullish on the monthly time frame, even though it had created a bullish breaker, and we were expecting that the dollar might trade into that bullish breaker. Look at it, it took out the lows here before giving us a shifted market structure above that candle high right here. So the dollar might trade into this level, okay, before it pushes for higher levels. Then we go down to the weekly time frame, and on the weekly time frame as well, you can see price has taken out the recently created high here. All right, the previous high here, price has expanded above that high, and we are looking to see that retracements happen into that bullish breaker of the monthly and the weekly time frame. As you can see here, I would prefer to see the dollar behave in this manner, trade into this level, then back up into that level. All right, That's my most preferred price action. Then we'll go down to the week daily time frame, and on the daily time frame we are simply identifying market structure. We want to see price sustain proper market structure. Price should form higher high, higher low in a bullish market structure. Alright, so because we are in a bullish order flow, we will need to see price continuously from higher highs, higher lows. Alright, so at this point you can see price gave us the last higher high, traded below the last higher low right here. Alright, but we do not see the body of the candle closing below that low. Should we have seen that, we would know that this will be a shift of structure that will support price to trade below into that level before it continuously pushed to the upside. However, I'm currently seeing something very interesting. After price retraces back into this level, we still see price showing willingness to form swing highs. You can see swing high, 3 candle price action. Alright, with the middle candle having the highest high and the low of the third candle has been taken out, even though price again is sitting on a bullish order block. Alright, currently price is sitting on a bullish order block. If we see price form a new swing low and takes out the high of the third candle of the swing low, then we know that the dollar is showing interest to just trade higher into higher levels without trading into that level we have outlined. But if we do not see that, then the dollar still have potentials to do as we expected. Alright, so you can see the bullish order block right here. The dollar traded into that bullish order block and is showing willingness to, is reacting at that level. Then let's go down to the 1 hour time frame, and on the 1 hour time frame, once we see a clear bullish shift of market structure, then we know that the dollar is going to go up. So the dollar has traded into that bullish order block right here, tapped into it. You can see, give us the first leg, failure swing. Once we see a shift of market structure here, then we know that the dollar is bullish. We would like to see a retracement into that level before we buy the dollar into the levels that we have outlined above that high right here on the 1 hour time frame, and the highs of the daily and the highs of the weekly time frame. So this is my anticipation for the dollar index. Then we go to the GBPUSD, and on the GBPUSD also just the same way. We would like to do the contrary of what we've seen on the dollar. All right. So this is the GBPUSD. Currently, we just go to the daily time frame and see how price is behaving. You can see on the daily time frame also price is still showing willingness to, we're in a bearish market structure. Price has been forming lower low, lower highs. Next level price should trade into should be that level there. Should we see a confirmation? All right. Should we see a confirmation, then this guy should trade into this level and the other level. But if we do not, then we'd like to see if this price, if this guy gives us a shift of structure as a reaction to what the dollar is going to do. If the dollar gives us a bearish shift of market structure, then we know that we are going to sell the dollar and buy this guy. If it doesn't, we know we are going to buy the dollar and sell this guy as well. Alright guys, so this is simply my expectation for the dollar and the foreign currency. Until next time, I wish you good luck with trading. Stay safe.